welcome back to our show. You know him as Dennis Gibb. So do I because, well, he's here a lot and his name is Dennis Gibb.
Because I am Dennis Gibb.
That is who you are.
Yeah.
Dennis, happy to have you back. And
Thanks,
I know with $1.4 billion in assets that you manage, you do have to be forward-thinking and live in the present as well. What are some other trends that you see? In case you just joined us, we've been talking about trends in 2013 in the investment world. We talked a little bit about ETFs and the brokerage houses dying, but there's certainly some more to discuss.
Well, I think one of the things that goes with the ETFs, and we're seeing a lot of, is pressure on fees and costs. People are very, very concerned about how much they're paying, and this is somewhat justified because we're in a low-return world. We're probably looking at 7 to 8% returns on the equity markets for the foreseeable future. And when you take out inflation, you take out all the rest of it, costs get important. So we're seeing people asking, about lower fees. Now, we're somewhat hesitant to do that because we think we provide value. But there is pressure out there for this sort of stuff. And if you can't demonstrate your value, you're going to be under pressure. And remember, fees only go down. They never go up. So, and I think you're seeing it in the mortgage industry, too. People are unwilling to pay some of the exorbitant costs you guys charge.
Absolutely. Absolutely.
Horrible, usurious costs.
And to your point, I think there's downward pressure on prices for everything.
Exactly.
We live in such this Walmart type of world where people just want the lowest price, and that's where most people hold value.
Exactly right.
And then they wonder why there's no jobs because you want to buy cheap crap. And if there's cheap crap, guess what? You're not willing to work to make it.
And I think the other thing is that, the internet and everybody else talks about every day you see, if you watch television, you see Sam Waterston out there telling you how much you can save money at TD Ameritrade or, the baby telling you how much you could save at E-Trade. So people get this idea that it's all the same service, and it's not. There's a lot of difference between somebody sitting down and doing a financial plan that's going to get you from here to your kids in college than somebody doing a stock trade. I mean, stock trade doesn't cost anything to do. A financial plan, it costs you a lot. I mean, we only have two things in my business I sell. One is my brains, and the other one is my experience and time. And I can't leverage time, so I have to leverage my brains. And pressure on fees is great, but don't be penny wise and pound foolish.
I think that's a huge point, and most people actually will demonstrate value. And just as we kind of talked about at the beginning, where a lot of people need that hand-holding. If you're buying and selling always on emotion, you're selling low and buying high. I mean, that's typically how people do it.
Yeah, we call them victims. Those people are victims of the markets when they buy them on emotion.
When they don't have somebody like you in their corner.
That's right. Unemotional, bloodless.
Leveraging your brain. Yeah. Dennis, what else should people be looking out for in 2013?
Well, I think there's going to be a huge change in the hedge funds market. This was the monster that was going to eat the world. These guys were growing. Their hedge funds popping up. Every trader who worth his cent was setting up a hedge fund, mostly so they could charge 2% and 20% of the upside and pay 15% taxes. There were more hedge funds than there are stocks. They're all trading the same stuff. All of a sudden, their performances started to fall apart. Plus, shockingly, we've discovered that some of them are downright crooks.
I can't imagine.
Just shocked. Anyway, some of them are actually going to go to jail over this, and some of them have gone to jail. This is an industry that's starting to fall apart.
It was a little wild west, wasn't it?
I wouldn't call it Wild West. I would call it more like barbarian hordes. They were coming down out of the forests of Germany or wherever they were and beating up on the Romans. I mean, it was unbelievable. And like I say, people with no qualifications were leaving firms and going out and raising $4 or $5 billion and then leveraging it up, 5 to 1, and then going out and trading stuff on some thing. And what they really weren't hedging, they weren't hedging a thing. All they were doing was trading actively. And then because they wanted more information, they started paying people to give them information. Some of the people crossed over the lines into insider trading. The SEC may be slow, but they do find you sooner or later. They've gotten some of these guys. This industry is going to come apart. There's going to be a lot of consolidation. There's going to be a lot of assets move here, and that with them having less assets, that should reduce the overall volatility in the stock market.
You talked about the information and all the information that's out there, and of course, you were talking about hedge funds getting information they weren't really privy to from companies. What about all the different sources of information? And is this a good thing? Is it a bad thing? Is there too much information for your average investor?
Yes.
Yes.
To all those. No, it's both good and bad. There is way too much information. Now, we do have a couple of things that are great about this. We all know that you can't put anything that's not correct on the internet, right? Everything on the internet is perfect. So anything you read on the internet is great.
The show goes on the internet.
The show goes on the internet, right? Everything's perfect on the internet. What's happened is there has been a proliferation of sources. Think about this. You've got CNN, you've got Fox News, you've got Fox Business News, you've got CNBC. You've got all these people out here doing all these financial shows. You've got
24 hours a day, 7 days a week,
7 days a week,
right.
you know.
And they have apps, and they have Twitter, and they have Facebook.
And you get lost in this. I mean, you have to suddenly decide what you don't care about. Like, I don't care about anything named Kardashian. You know, I don't care about Charlie Sheen. I don't care about those people. They don't determine the big things in my life. By the way, folks, you know what happens if Kanye, if you have Kanye West, Charlie Sheen, and Lindsay Lohan in the backseat of a car?
What?
Guess who's driving? The cops.
Yeah.
So I don't care about those people. Okay, they don't affect what I do. I have no idea who Honey Boo Boo is.
Apparently, you do.
Well, I've heard the name, but I mean, I've heard a lot of names too. So what's happening is we're being bombarded with information, and people are being pulled back and forth. And this information is couched in such a way as to pull at people's emotions. And if you fall for it, it's going to hurt. So what you have to do is decide what you don't care about. You know, for example, whoever the next Treasury Secretary is hardly affects how much money any of us are going to make. Okay, he may not be able to write his name, the dollar. All he does is sign the dollar bill anyway. So the point is that's not important to you.
But people do get very emotionally involved because of the political piece of this.
We call them targets. People who are emotionally involved, they make bad decisions because they're sitting there. And they overthink things. When you get too much information, you overthink. And the problem is you have to sometimes just say, okay, I don't care about this. I'm going to make a decision based upon the facts that I know. And you have to determine what the facts are. So,
going back to the very beginning, that's that preparation part.
Exactly.
If you're prepared to make decisions, small amounts of data coming in later shouldn't necessarily affect them. You can listen to them, but you should be prepared enough to realize that's not the big news.
Well, and you also have to determine what you believe in. And if you believe that buying this stock because of this is a good idea, the fact that John Boehner makes some comment about the debt ceiling is not going to affect the overall performance of that stock. You have to learn what affects you and what doesn't affect you, what your emotions are. So, it's a really difficult thing to do. And I mean,
I think what you're saying though is not necessarily what it may affect you emotionally, but making sure that you're not making emotional decisions.
Exactly. And one of the things that and I'll say this to a lot of people, and
here we go.
People are going to get mad at me.
Welcome to Dennis Gibb.
Okay, folks, get your head out of your cell phone and look around the world. Not everything's coming over your smartphone screen. There's a lot of stuff happening around that your two eyes can detect. And guess what? Most of your friends don't know anything more than you do. Mm-hmm. And all they're doing is wasting your time.
Well, I think, as you say, you can only absorb so much information. Now, whether your face is in your cell phone and you're you're looking at Facebook or whatnot, and that's what you find interesting, that's great. But that, I think, is another reason that you would want to hire a professional to help you with your money, because if you're interested and you're dealing with the gossip pages and your friends, not that it's like dealing with your friends, but it
could be.
It could be. But if your focus is not necessarily on what matters when it comes to your finances, you probably shouldn't be the one making the big decisions.
Well, I mean, I'll ask you a question. How much good investment advice do you get over Facebook? I mean, for me, Facebook is a bunch of people in high school and college I didn't like then, and now they want me to be friends with them. I mean, please. I mean, I didn't like them then. I don't like them now.
But now you are friends.
Well, supposedly. As you know, I do not have a Facebook account, nor do I understand.
Heather, we got to hook him up.
I understand what
account.
I understand what Twitter is, but I don't understand how you use it, and I don't care. It's not important to me.
Yeah.
So anyway, that's just you got to watch the information sources, think about it. Jim Cramer's not that important.
We just have about a minute left before we have to go to break. But this is one that I do want to hit on before we go. Is this the demographics?
Oh Lord!
And because truly the amount of the information people are paying attention to does have a lot to do with demographics.
Right.
You're going to have people who are in Facebook and into the gossip. You're going to have people who are into politics.
Right.
You're going to have people who are into sports, right? And I mean, it's fairly across demographics. So when you start having a change in demographic, you start to have focus maybe outside of the things they should. What are your thoughts on that?
Well, demographics can be destiny if you don't do anything about it. And the changes in distributions of population, fertility rates, sex ratios, that sort of thing. By the way, those of you in Tukwila, don't get excited. That's not what you think it is. It's, it has to do.
Tukwila is like 6 minutes from here.
I know, but who's down there? You got 7 furniture stores and a Wendy's. I mean, come on. There's nothing there. Don't worry about him. You drive out Tukwila to get to the airport. Anyway, I think. Anyway, the changes in demographics make differences. I mean, for example, think of the rise of Hispanic surnames in the United States. I mean, last year, the top 10 home buyers in California, 8 of them were Hispanic surnames. And then there was one Asian, and there was one Smith. Okay? So it's changed dramatically. The Asian influx. Plus, people are having, younger people are having less children. There's less of them because my generation had less children. And when you have a generational change, like the old fogies like me are leaving, we're toward the end of our lives, right? And people like you and Heather are coming on. You have different perspectives about things on life, and you're going to change your buying patterns. I mean, there's 76 million baby boomers. There's about 45 million in the generations behind us. So you're going to have 76 million boomers trying to sell houses to 45 million people behind you. And somehow that math doesn't work. So you have to think about the consumption patterns and what's interesting. And if you don't do something about demographics at a political and economic standpoint, it determines your destiny. But otherwise, you can make a lot. Politically, socially.
This is what happened in Europe when they started. People decided that they would rather travel and have kids, and then all of a sudden you don't have enough taxes to fund the whole country.
I mean, the rarest thing in Germany these days is a baby. And you have Japan. Something by 2035, 60% of the Japanese people will be over 65 years of age. No one has ever run a country with that kind of demographics before. Mm-hmm. And you see what's happening. They're out there trying to find every way to make it happen, and they're deflating their economy, and it's a mess. But they didn't look at the demographics, and they have no inbound. The way you get around demographics is inbound migration. 98% of the people in Japan were born there. So, they have no inbound sources.
Dennis, we have to go to break. Thanks so much. Stick around. We'd love to hear more of your opinions at the end of the show. When we come back, Don Rushton's going to join us with RE/MAX, and we're going to talk a little bit more about buying houses, no matter what your demographic may be. We'll be right back.